in offshore equities. That's the word from the Old Mutual Investment Group. This as it sees improved growth potential in places like the US, Europe and Japan. The investment group says South African companies exposed to commodities and the domestic economy are likely to perform poorly in the short to medium term given the country's growth outlook.
With local economic fundamentals not looking stellar, Old Mutual Investment Group is punting some offshore investment. Global and domestic factors are seemingly conspiring against the local economy outlook.
It's certainly going to be a tough year. Growth has slowed down to very low levels, and inflation is on a bit of a rising trajectory, and the central bank has hiked rates again recently. And we've got globally China slowing down, and the Federal Reserve Bank in America likely to hike rates in December. So there are a lot of both domestic and global headwinds for the economy.
Old Mutual's chief economist Rian Leroux said he believed monetary and fiscal policy had been implemented appropriately this year. But he cautioned that with growth expected to be around 1.5% both this year and next, it could put pressure on the country's debt levels.
The rating agencies are very concerned about the fiscal situation, and we all are. Now, the fact of the matter is also that the postponement of the fiscal consolidation is partly due to the fact that the economy is so weak, and therefore revenue estimates have been revised down. So on the one hand, you can half forgive government for what has been happening. The good thing about the fiscal situation is that they still have a spending ceiling in place, and it looks like they're adhering to the spending ceiling. So that's the anchor at the moment, and that's a good thing. So really, what we are looking for is we're looking for economic reforms that drive the growth in the economy to a higher level, and that will obviously then generate more tax revenue and ease the fiscal situation.
Despite uncertain economic times, Omixa is urging investors to stay invested and not to react to shocks.
The year that we've just been through, and probably the next year, is going to be characterized by quite big dispersion between economic outcomes globally and between investment returns. And I think that kind of pattern will probably play out through next year. I think that the key thing for investors to remember is that you need to take a long-term strategy towards investing, and you need to be disciplined. And to invest in a balanced, diversified portfolio is very important. Whether you do that yourself or with a professional investment manager, having a diversified portfolio is the best way to navigate these kinds of investment climate.
Omixa is of the view that the rand continues to have downside possibilities given the country's wide current account deficit and an expectation of more capital outflows in the event of a US Fed liftoff in rates. Nompumelelo Siziba, SABC News, Johannesburg.